There are a number of non-tax and tax factors that are important to review and understand when you are selecting the business entity for you. The primary non-tax factor that individuals look at is with financing. If a faculty member is going to be able to get venture capital financing, and it looks like that venture capital financing is going to come within the year, that may drive that faculty member to set up a Delaware C corporation, because venture capitalists want to see companies that they invest in set up as that type of business entity. Other non-tax factors that drive the type of entity that will be selected include who are the owners that are involved. If there are owners that are foreign owners, then that will automatically rule out being able to set up an S corporation, because S corporations have to be owned by U.S. residents or resident aliens. Other factors include where will the entity be located and what are the rules of that jurisdiction where that entity will be located. You also want to see how easy is it to set up the entity. For a limited liability company, and one that's formed in Michigan, for example, it's relatively easy to set up this type of business entity because there's one filing that will establish the company and very few documents that need to be executed that go along with the company. Whereas with a corporation, you have to file and document with the state, and then there are a number of other documents involved with setting up the company. Another factor is how easy is it to administer that company. For example, with a corporation, corporations have a number of corporate formalities that they're required to comply with in order to make sure that the company is properly running. For example, a corporation requires its members, its shareholders, to have meetings every year. It also requires certain individuals to be involved in the company. You have to have directors of the company, and you have to have officers in addition to shareholders or owners of the company. So if you're trying to run a company and you're not going to be getting venture financing right away, and you might be overwhelmed with trying to manage a company and having all of these meetings and the various formalities of a corporation, then a limited liability company may be for you. Another factor that can drive the entity choice is whether you will be compensating certain workers with stock options. Many companies are not able to pay individuals with cash because they're cash strapped, and decide that they want to compensate the workers with stock options or restricted stock. And this is more easily done if you set up a corporation as opposed to a limited liability company. You're able to set up options with a limited liability company, but it is a bit more complicated to do this. Thinking about the final exit from the company. So if you as a faculty member are thinking that you'd like to be involved with the company for a while, but eventually have the company be acquired by a larger company or perhaps take the company public, probably makes sense to think about setting up the company as a corporation, and you'll be able to more easily go public with a corporation. The final thing that I'll mention is it's important to think about limited liability. You want to make sure that any entity that you set up will ensure that you, as an owner of the company, are not personally liable for its debts and obligations. And setting up a limited liability entity, such as a limited liability company, an S Corp or a C Corp, will help to make sure that you won't be subject to liability. There are certain exceptions to this. You do have to make sure you comply with certain formalities, but setting up one of these entities will help to address this issue. There are a few tax factors that you need to think about when you are setting up a business entity to see what makes most sense for you. One of the factors is whether you'll be contributing property or money to the business entity and whether you will be taxed at the time that you contribute property to the entity. With an LLC, you generally are not taxed when you contribute property to the entity, but you may be with a C corporation. So you need to understand what you'll be contributing and understand the factors for whether you will be taxed. Another factor is whether you will have a lot of losses from the company. For example, if you are spending a lot of money buying equipment and you don't anticipate making any money from the company up front, it may be more beneficial for you from a tax perspective to set up an entity such as a limited liability company or an S corporation where you're able to claim those losses on your personal income tax, as opposed to setting up a C corporation where you're not able to take those losses on your personal tax return because those losses stay with the corporation. And the final tax issue that I'll talk about is whether you think you'll have earnings from the company and whether those earnings will be subject to self-employment tax. If you set up an LLC or an S corporation, those earnings will be subject to self-employment tax. An LLC is subject to more self-employment tax than an S corporation. Whereas with a C corporation, you don't have to be concerned about the self-employment tax, but there are other taxes that you may be subject to. So again, it's important to make sure that you talk to an accountant and a tax attorney to understand what those implications are for setting up one of your business entities. But these are a few of the tax considerations that you need to be aware of.